LUNC is dead, but what could Luna 2.0 be good for? Luna Classic, LUNC, has stagnated and is possibly going to continue crashing now that Terraform Labs has abandoned its old blockchain. The new Luna 2.0 is making headlines after getting listed on most, if not all, major exchanges. However, the new Luna is not performing quite well, and its price could continue dumping because of intense volatility. The token was launched on May 28, but it has already crashed by 66.5% from its all-time high according to CoinGecko. Will Luna 2.0 be successful? Luna 2.0's price has showed differing prices on major exchanges following the controversial airdrop to holders of the old Luna token, LUNC. On Kraken, Luna's price traded between $4.80 and $30, while it traded between $1 and $20 on OKX. After the Binance listing on Tuesday, it pumped to $9 before recording a sharp decline. These price discrepancies show that the token is still highly volatile. While trading volumes have been high, the general market sentiment for the token is still bearish. Terraform Labs currently has a very low trust score in the market. Institutional investors also seem to be staying away as they avoid to buy Luna amid the volatility. Luna Airdrop leaves out many buyers, is this fair? The co-founder of Terraform Labs, Do Kwon, was behind Proposal 1623 to create a new Terra blockchain and abandon the collapsed UST stablecoin and Lunaclassic, LUNC, tokens. Luna 2.0 is already live after launching on May 28, but there are still unanswered questions and concerns about everything that happened from the time UST crashed to the launch of a new blockchain. Controversial Luna Airdrop. The Terra Ecosystem Revival Plan released on May 16 included a plan to reimburse Luna and UST investors affected by the crash. These investors were to receive an airdrop of the new Terra tokens. The plan was to airdrop tokens to pre-attack holders at a snapshot taken at Terra Classic block 7544910 and post-attack holders at a snapshot taken at Terra Classic block 7799000. The airdrop has already happened on most exchanges, but it has been accompanied by immense backlash from the community. One of the arguments tabled against how this airdrop was done is that it has failed to consider the investors that rushed in to buy the old Luna, now known as LUNC, to save the price. Many investors bought Terra at low prices despite Terraform Labs continuing to mint more tokens to save the UST peg in vain. Per the airdrop details, these investors have been left to dry because they will receive the smallest share of the airdrop. One Twitter user complained sarcastically, saying, "Yes, after losing $700,000 in Luna, my airdrop of 14 cents will make me whole." On Reddit, one user also complained of losing $30,000 worth of Luna during the crash. The user said he had bought the tokens over time since 2021 and believed Luna was one of the best DeFi cryptos. However, he only received 400 of the new Luna tokens during the airdrop. After going through the psychological battering of the collapse and accepting it, this is a very bitter pill to swallow, and I think us Luna holders should have been better compensated, the user added.